Welcome everybody to Digital Asset News, or DAN for short. My name is Rob, and today I've got some concerns. And the concerns were from an old article, but what it really came down to, there was an alleviation of my concerns from this interview here. And this was with Paul Tudor Jones, billionaire, legendary investor, hedge funds and whatnot. And the thing that he talks about in here helps to alleviate some of my, I think, some of the fears that I see coming up with the market. And it all really came down to the fears, which was this. It was actually his buddy, Stan Druckenmiller. There's also another American billionaire. And he came out, about 3 or 4 weeks ago, and he talked about how there's going to be a high probability of the markets being flat for a decade. And I've been thinking about this for a long time. And there's just some ambiguity of which ways I want to go. And it really came down to what he talked about here. And the reason why I listened to this guy is because he's been around, he's got experience. And this is what he says. He says, there's a high probability in my mind that the market is, at best, going to be flat for 10 years, sort of like 66 to 82. And what he's talking about is during that time, S&P 500, the markets were just languishing. And the reason was because they had a pretty massive bull run between 60 and 65. Or 58 to 65, if you don't want to really be specific. But then after that, and you see like these little peaks, but it really was flat until 1975, 1980, when we're looking at S&P at 100, which is kind of crazy. And then what it kind of came down to was a couple of different factors. First, there was the oil crisis, the first one, then the second oil crisis. And then, of course, Volcker had to step in the 70s, and he had to raise the rates, and we all know that because everybody's been talking about it. And then, of course, you had the banking crisis in the 80s on Black Monday, economic crisis in Japan, or the global economy. Then you had a dot-com bubble crash and the housing bubble crash and all that stuff. Everything's in a bubble, right? So when he talked about this, I'm like, I see the same things that are going on now. Oil issues, banking issues, housing issues, not dot-com bubble, but innovation bubbles and issues. And it kind of got me thinking, well, maybe it's going to be, we've had such an economic climb for 13 years, maybe it's going to be a 10-year shot of just stagnation, which would be, I mean, if you want a dollar cost average for that time. But then there was this great interview with Paul Tudor Jones. And again, this gentleman, the reason why people listen to Paul Tudor Jones, because he's a legend, investment legend. He's a billionaire. And just for perspective, just so you know, there's not that many billionaires in the world. There's only 3,300 of them. And most are in the United States. Sorry, I'm a homer. That's just what it is. Canada's got 60, Germany 176, and blah, blah, blah. Okay. And of course, millionaires, that's much easier to be. You've got almost, well, this is in 2020, probably 60 some million millionaires that are out there. And what he's going to talk about in this interview is he's going to talk about fiscal retrenchment. And I need you to understand what he's talking about before we get going. And what retrenchment is what a government has to introduce deflationary fiscal measures designed to reduce the amount of borrowing and debt, which is going on quite heavily, that has been run up during the downturn and economic financial crises. It can be achieved in 2 ways: raising indirect and direct taxation, making cuts in the real level of government spending. And Druckenmiller here, that was his whole thesis. He says the problem with this stagnation, and there was 3 keys: the reversal of globalization, which we're seeing right now, a lot of nationalization. Countries are very upset with the different countries that are out there that have supply chain issues, China being the one, and it's leading to nationalism, loose monetary policies, which we've seen, and of course the Fed and their rate hikes. And he talks about how the stock markets tend to fall when the interest rates rise, as higher rates may hit company profits. This reduces the appeal of stocks versus assets like bonds, which are less risky. So what he's talking about here is that, yes, I think the stock market is going to be flat for quite some time. I think it is. And then what Druckenmiller is going to talk about, entrenchment, when he talks about, of course, there's going to be rate hikes and things like that. We know what's going to happen. So just take a listen to what he says right here. I think it's going to make a lot more sense about why I see that our market will probably take off in a little bit. Or at some point. Take a listen.
You know, in the middle of the pandemic, I remember you joining us. And talking about the possibility of a runaway inflation. And one of the things you talked about then was a hedge around using crypto and Bitcoin. and your friend Stan Druckenmiller had bought some Bitcoin at the time too. Stan Druckenmiller recently had an interview with Joe Kernan at Delivering Alpha, said he's out of Bitcoin. Where are you?
I've still got a very minor allocation. I've always had a small allocation to it. I think, you know, if you think about every decade, the 70s were the decade of inflation. The 80s was a decade of kind of boom bust, huge swings in dollar volatility. The 90s was equitization, the dot-com bubble. The aughts was the mortgage bubble and the great financial crisis. The teens were the peak of globalization and probably the peak of central bank experimentation with monetary policy, right? The 20s, I'm afraid, are going to be that period where we really focus on debt dynamics country by country, fiscal deficits, and the need to run certainly fiscal policy in a way that gives people confidence in the long run value of the currency. And the problem that we've had really for the last 12 years is that we've done this massive experimentation with monetary policy where we suppressed yields, and we did this massive experimentation on the fiscal side during the pandemic. And so my guess is the 20s are going to be just the opposite of both. We're already seeing that right now from the central bank. We're going to, whoever is the president in 24 is going to be dealing with debt dynamics that are so dire. And so
so dire that this is the 1970s?
No, so dire that we're going to have fiscal retrenchment. And that fiscal retrenchment means that if we don't have fiscal retrenchment, that everything that we spent, if you think about the teens, which was all about suppressing yields, right? I think the 20s will be just the opposite. I mean, higher term premiums in bond markets, higher term premiums in stock markets. They'll be just the opposite of what we experienced the last decade. So in a time when there's too much money, which is why we have inflation, and too much fiscal spending, something like crypto, specifically Bitcoin and Ethereum, where there's a finite amount of that will have value at some point, someday. I don't know when that will be, but it will have value. That scarcity.
And the value at a much higher number than where we are today.
Oh, I think so, yeah.
Like, you know,
So as he's talking about this, I mean, think about what he said, that fiscal retrenchment. And if we take a look, well, I guess we're not going to take a look. If we take a look at, how to solve fiscal retrenchment, and he talks about it, he goes, we're going to have to, there's going to have to be a raising of the rates. There's going to have to be direct and indirect taxation. And this is what Druckenmiller had talked about, because indirect taxation is raising rates, essentially, if you think about it. So when he talks about the crypto markets, which in general, broad terms, Bitcoin, Ethereum, which he said, which he did say, and there's a finite supply. There's not a finite supply of Ethereum. It can keep growing. However, as time goes on, they state it will become deflationary. Not for sure, but it's deflationary right now. But that'll happen with more use cases or more usage. So when I think about this and everything that's going on, remember Druckenmiller here and Paul Tudor Jones, these guys are, they are old school stock market guys, S&P 500, Dow, NASDAQ, all that stuff. So when we get into, and Druckenmiller says it might be flat or stagnation in the traditional markets, they might be right. But then I think about it, I'm like, what does that mean as far as for our market? Does that mean, do we lump ourselves in there because we're so correlated? Like, I don't know what the price is crypto today. I stopped looking, but just correct me if I'm wrong. It's either it's either down or up, not too massively, and S&P 500 and NASDAQ are probably falling along because it's correlated. But I think as time goes on, I'm not going to be too worried about it, because I just remember that if the traditional markets, there's not that much of a big upside over there, as we can see as these guys talk about it. But if you take a look at just how much is going on with, I mean, the money that's sloshing around. I've used this many times. I'll still use it. Each one of these little boxes is $100 billion. And this was in 2020 when crypto was only 244 billion. Now you know what the market cap is? Correct me if I'm wrong. I think we're still under $1 trillion. We're still under 1 trillion for a market cap of all the crypto that's out there. And I'm thinking Bitcoin could be around $440 billion. So not that much. And of course, we take a look at the Fed's balance sheet, which is now 9 trillion, not 7 trillion. That expanded. Billionaires, just these 1, 2, 3, 4, 5 guys is $8 trillion. That's ridiculous. But no, that can't be right. That's probably all the world's billionaires. Gold is around 12 trillion. Fortune 500. I just want you to notice this. This was 2 years ago. Apple was $1.3 trillion. You know how much Apple is worth right now? It's worth $2.2 trillion. And when I take a look at that, I think to myself, there's all this money sloshing around. And it just really hasn't found its way into crypto. Why is that? Because even the stock market has over $100 trillion. And money supply and debt's $260 trillion. And real estate is $280 trillion and so on and so forth. I'm just thinking to myself, why hasn't it found its way in there yet? Because it's because of risk. It's because of risk and the perceived risk that's out there. And there was a pretty good video from Pompliano, and he had on David Mercer. He's the CEO of LMAX Group. And he pretty much just laid it out. I know this is a very unpopular opinion. I always say it. I think it's unpopular for some people, but not most people. I still say we need some regulation so the big industries and institutions can kind of run themselves in here and say, okay, I'm not going to get rug pulled by some crazy DeFi project. I'm not going to have these glitches and different problems. And I'm not going to have the issues that maybe these algorithmic stable coins like a Luna just disappears. It's for them, for the trillionaires and the big institutions, it's not about gaining wealth. It's all about preserving wealth. And there's all these issues that Druckenmiller talks about and Paul Tudor Jones talks about in the market and the stagnation in traditional markets. I got to tell you, I just see that if there's any type of positive regulation that comes out, Lummis has a pretty good bill, the senator from Wyoming. If that comes out and gets passed, I know it's not the greatest for all the crypto projects, but here's the truth. I don't really care about a lot of the crypto projects because most of them are trash anyhow. Sorry. I need them to go away. And I need us to be adults and just get on with where the crypto market should actually be. And I think it can go do pretty well. It just has to have that point. So let me know what you think about that in the comment section. I'm sure it's not very popular, but it is what it is. And then before I move on to the next one, I will say this. Just because institutions are here and we want them to be here doesn't mean that they won't sell. They're the first ones that'll dump on you. So remember, they're not here to get you rich. They're here to serve their shareholders and the people that invest into them. So don't think that they're going to be holding forever. And that's it. So make sure you think about that in the comment section. And little bonus section. I just want to tell you, I know it's tough right now because, look, the interest has definitely waned in the crypto market as we see everything go sideways. I can tell. It's just how it goes. I was the same way in 2018. But you have to remember this, and that is that this is when all the millionaires are made, like I always talk about. I just wanted to remind everybody about this website when you're feeling down, dca-cc.com. Just there's a link in the description. And you can use all the different cryptos that you want. I wish they would fix this part here, though. You can't really see them. It goes like 1 through 100 of the top 100 cryptos that are out there. And you can see what it would be like to DCA back in the day. And then the most easy one is, I put an example, just $25 a week. And I'm not telling you this is not financial advice. It's just what I've done in the past. I'm not a financial advisor. But $25 a week from February 2018 to September 2022, if you would have sold at a pretty reasonable time, let's just go around here. You're not going to hit the top. Sorry, you're not. But around here, as things are going down after the big blow up, you only would have invested $4,300 and you would have had $26,000 in the bank account. That's not bad. And then who knows? Who knows what could Bitcoin could be? Now, if you sold the absolute top, you'd have invested $4,800 and you have $36,000 in the bank, which is pretty not too shabby. And then, of course, whoops. If I go up here and just increase this by, maybe I want to do $100, $400 a week, $400 a month. It's kind of pricey. Just saying, if that's you. Again, you would have had, geez, Elise, you would have had 16,000 invested, but you have 133,000 in the bank. And like I say, like these bear markets, this isn't for everybody to become a millionaire. Not everybody's gonna be a millionaire, let's be honest. But maybe you could be a 10,000-aire or a 100,000-aire. It's really up to you and what you want to do and what your risk tolerance is. And then, of course, as you go down on the list, especially if you went down a little bit farther, and like these degen plays down here, maybe. Well, I wonder what this would be. Decentraland. Holy smokes. Is that right? Okay, that's ridiculous. But if it had gotten Decentraland, your investment would have been $20,000 if you put $100 a week, but you'd have 1.4 million. And here's the thing: you'll never sell at the top, so but it's just something to take a look at. And then when we do the Q&A, I'll punch in whatever cryptos people want to do. And then also, I want to remind everybody to pay attention to the crypto products that are making strides. This just caught my interest, and I think that crypto gaming is going to be the next one with real world utility. I know people will say, but Rob, what about Bitcoin and its utility? I'm like, is it really being used a ton? Like, is that a speculation? El Salvador, is everybody using it over there? Is it store of, well, I don't know. I don't think so. I think if I was in a third world country, I'd probably want to use a stable coin. That's just me. And, but anyhow, going off topic again. So like I was looking at this one, this is Cornucopias, and it's a blockchain game, and it's built on Cardano. And they were at the CNFT con. Check this out. Whoops, super loud. But that's the actual gameplay. It's not just some like rendering or something that's going on or something that they purchased just to make that's a real playable game right now. Now, it's not totally playable all the way, but I'm like, that's what I'm looking for. I'm looking for things that actually that materialize and people don't just say, it's going to happen, it's going to happen. There we go. So I like to see those things, and that's what's going on. And that is it. So look, that's it for today and the news itself. If you got to take off, take off. You've been here for 17 minutes, maybe something else to go do. But if on your way out, please hit that like and subscribe button. Not that YouTube will ever notify you, but whatever. And that's it. So look, thanks so much for stopping by. I appreciate it. Now, if you want to stick around, we'll do the Q&A section. I'll go over some more of those DCA examples if you want to, and we'll just do a little Q&A. So thanks so much for stopping by. I appreciate it. See you on the next one. Now let's get into Q&A.